Welcome everyone to the CFO Swinger Watch Report's technical analysis video for the week of July 15th through 19th. Now, before I begin, make sure you guys are always reading the report first before you watch this TA video. Remember, I have way more details on what our actual swing trade ideas entail for this week. For example, I provide the exact option contracts that we need to be looking to execute for each swing trade idea and the exact 3-point game plan for each swing trade idea using equity. And that's just a small snippet of what the weekly report says. So make sure you guys are not only watching these TA videos. With that, let's take a look at the markets. So in this week's video, I'm not going to be saying anything that you guys don't already know. For example, for the S&P 500 here, we're still simply looking for kind of that blow off the top move. And essentially last Friday, that's exactly what we got from the last hour's price action. So we hit a high, a new all-time high at 563.67 or $563.67. And then during the last around, I would say 30 to 35 minutes, we saw a nice push back down as kind of the buyers started to sell and more the sellers started to come back in. And we ended up closing right below $560, which was an intraday level that I was looking at along with 561. And so if you guys remember from the private CFO Discord, I strictly mentioned that I would want to see the market pulling back near the end of the day back into that 560 to 561 range. And the market gave us a better range than that, since we ended up closing right below the lower range of 560 by 1 cent. So we closed at 559.99. Now, what does this mean for tomorrow or for this entire week? Well, first of all, we will definitely be needing some more sideways price action and a little bit more tighter price action as well. However, I would not be surprised if we do see any small gap downs anytime this trading week. So, basically my broader perspective, my mid to longer term perspective on the markets is that we need to be seeing an intermittent dip, right? So that means all the support levels that I've given you guys last week and even last week still remain. For example, if you do go back down, we need to be able to retest 550.20. But that means that we need to be closing below both my daily 10, this red line here, and my daily 21 SMA, this light blue line here, because if the price is below both of these two SMAs, and at some point it can retest 550.20. And right now the daily 10 and the daily 21 SMAs are both curling up higher, and at some point they will reach and support the price. However, as long as we see a bit more sellers coming in, more than buyers trying to defend this area of short-term support at the daily 10 and the daily 21 SMAs, we should be able to see a nice breakage below both of these two SMAs, and we can start a nice minor corrective move in the short to mid term. So as long as we can retest 550.20, and as long as we can see again more sellers coming in compared to this previous all-time high level, then we can also come back down to retest 540 or 540. Now, if you guys remember from last week, I specifically talked to you guys about this specific range, this nice 10-point spread range here that the market can be stuck in for a couple of weeks if and only if the markets decide to come back within this range. And so for me, ideally, I would love to see the S&P 500 coming back into this range, or this nice wide 10-point range, so we can kind of consolidate this wild move up higher that we've seen so far since April's dip. Okay, and so as you know, all the while this is happening, right, we do have this small gap up that I also mentioned last week. And with the rising daily 50 SMA, there is a small probable chance that we can potentially break below 540 and head back down to around 536.50 to officially completely fill in this gap up area. However, again, this daily 50 SMA is still slowly curling up higher, which will be kind of a support for buyers, long-term buyers, and sellers could have a lot of trouble trying to break below the daily 50 SMA, because I would assume by the time that we're moving sideways in between this wide 10-point range, the daily 50 should be nearing 540 to 541 or even 542 at that point. So as long as we can see a long-term support coming in around the daily 50 SMA, then most likely we can still find a lot of good support around the lower range area of support surrounding this 540 whole number level. Okay, so again, nothing has really changed much here from my perspective. Ideally, we do need to see an intermittent correction, and if you guys kind of trace with the ruler here from the all-time highs from last Friday and go all the way back down to at least 536, that's nearly a negative 5% move back down, which is the minimum requirement for a textbook correction, right? And I told you guys this multiple times, right? The textbook percentage range for a correction is from 5 to 10%. It can kind of vary at each extreme range, but that's kind of the general rule that you guys want to keep when you're looking for a textbook correction to the downside. All right, so yeah, that's kind of it for the S&P 500. Again, nothing has changed other than just the fact that we just need to keep all these support levels, these 3 specific support levels that I've shown you guys since the last few weeks. Now, let's take a look at IWM. So if you guys know, right, or if you guys don't know, we have absolutely done really well with small caps. I mean, we were prepared for this move. So if you go back a few months ago, we were kind of kicked out on our IWM long positions. I believe it was around early June. And unfortunately, small caps weren't able to hold over 200. However, I knew that we need to be seeing some sort of a magnetic attraction to the psychological $200 level. And after we were kicked out, we continued to monitor the fact that the price continued to really be magnetically attracted to this $200 psychological level. And we saw this very tight price action of whipsaw back and forth right at the $200 psychological level. And that's exactly what occurred for most of the month of June, and even it occurred in this month so far as well. However, once we got that really nice inflation print that kind of basically officially confirmed that deflation is in our hands, IWM skyrocketed last Thursday. And I personally took some profits. I didn't take half profits yet, but I am still holding on to the rest of my IWM positions. Again, I am double layered up on IWM, and I'm glad I did, because the next following day, last Friday, we got a nice gap up again, and we hit a new higher high pivot point. So we have officially broken above all the previous pivot high points that we've seen so far. So all the arrows seen here indicating the previous pivot high points, and also we have finally broken above March 28th previous pivot high point. So we are officially in a nice uptrend. Now, as I've said in the report, there needs to be a little bit of some consolidation going into small caps and even mid caps, or the overall laggards, as this is quite a rather rapid but a great bullish breakout to the upside, right? So as long as we can see, from the highs here, at least minimum a 2 to 2.50% move back down, we should be able to see at least a minimum retest of around 210, which is the previous resistance level or the initial kind of official breakout level here for IWM, right? And as long as we can continue to stay above 210, then we can continue to move onwards to the upside and hit all of my targets that I've outlined so far for IWM in the mid to long term. All right. All right, so let's take a look at our first swing trade idea for this week. So we have XHB, or the Home Builders ETF. So if you guys don't know the Home Builders ETF, so this one had an amazing, actually it's one of the best performing quote unquote laggards in this overall lagging group. And excuse me guys, XHB, obviously from a technical angle, it's not lagging. It's sitting right around the all-time highs area, and just from the weekly time frame and just from the naked eye view, you can clearly see that this one has been flagging since March of this year, and this is a great weekly bull flag that we've been forming. However, we need to be able to group in home builders and kind of the real estate sector and all the other quote-unquote defensive sectors like the energy sector, utilities, healthcare sector, as these all of these sectors will become key factors into kind of the defensive positions that big money or smart money might take if the overall market decides to have that intermittent correction to the downside. And so what happened with home builders last week was that as deflation was basically confirmed, the process of deflation was confirmed, as a matter of fact, home builders were very, very ecstatic because the fact that we are getting closer to our first rate cut. And the entire real estate sector, industry, and just overall the home builders as well are very rate sensitive. So with the fact that we're getting a potential rate cut, official first rate cut later on this year in the September FOMC meeting, like I've been saying for so long, even at the start of this year, home builders have really just performed really well last week and is one of the best performing sectors out of all the other sectors that had a huge run up thanks to that inflation or CPI print. So from a technical angle here, what we're trying to play is this nice bull flag on the weekly time frame, and even last week, there seemed to be a small low volume pullback that basically broke the price below this flag's support level around 100.50, or if you guys want to be simple, this $100 psychological level. And it was kind of a small shakeout. And if I were looking at this last week, and if I was paying attention to this last week, I most definitely would have gotten a long position on this stock over $100 or 100.50 as seen at this level. But obviously, we were already heavily invested into small caps or IWM, so that really wasn't necessary since XHB literally followed exactly what small caps did as seen on the daily time frame. Now, with the weekly time frame in mind, the daily time frame needs also a pullback, just like IWM. And as you guys can clearly see here, it's very similar price action. And XHB has hit a major daily resistance level at 110 or 110, this whole number level of resistance. And so that can potentially become our long-term confirmed breakout entry to the upside. However, like I said already, this also needs a very, very nice, solid textbook pullback, very low volume pullback. And then, ideally, some flagging action right underneath this 110 level. And this can allow and give time and room for my daily 10 and daily 21 SMAs to start catching up to the price. And as long as we see that, and as long as we see the daily 10 and the daily 21 SMAs here, my red and light blue lines respectively, crossing over this daily 50 SMA, which is my dark blue line here, we should be able to see this flagging action continuously forming and eventually completed right underneath this 110 resistance level. And that is the reason why I gave you guys an early but a riskier entry point, a bounce entry point at 106.10, because I would love to see a nice pullback that actually retests a major level of support that we have seen previously, and also a major level of resistance on the daily, which is right here, so 106. All right, and that was also when we had that nice gap down back in April here, and also this was a huge level of resistance, consistent level of resistance for most of May and most of June, right? So as long as we're able to come back down to retest this 106 level and we see a nice pivot at 106, then we should be good for a nice bounce entry. Again, it's an earlier but riskier entry point, right? So make sure you guys are reading the report to see what the rest of the analysis says, and also, most importantly, what exact option contracts that we're looking to play for this swing trade idea, along with the 3-point full game plan. And last but not least, let's take a look at our second name, Disney. Now, Disney, I am most likely going to be focusing on this one for the longer term, mid to longer term, but ideally longer term. And that's the reason why for Disney, I highly recommend you guys to be only focusing on this ticker on the weekly or even the monthly time frame. But for the sake of this technical analysis video, let's take a look at the weekly time frame. So Disney has been quite an eyesore for most long-term investors and even just regular day traders, because Disney has completely diverged away from what the overall markets have been doing. In fact, this one is making lower lows, right? It's basically erased all the progress and that huge breakout that it had back in early January and I would say late March, and it's completely 100% erased all the gains that it has made in that specific time range. So at this point, this makes me think that there has to be some sort of a recovery bounce. No matter how small or big it is, I need to be able to see some sort of a recovery bounce, because I know that long-term buyers were involved in this nice ramp up higher, and it wouldn't make sense to me that these long-term buyers would not try to come back and defend the last piece of the breakout that we saw back in January to early February. And that type of thinking literally perfectly aligns with what the weekly time frame is showing us, because the price has now come back down to the weekly 50 SMA, this dark blue line. Yes, my weekly 10 and weekly 21 SMAs are curling down. We've seen a nice bearish cross back in early June. So short term to midterm, very bearish. However, from a longer term perspective on this weekly time frame, we have retested the weekly 50 SMA, which is a huge area of SMA support. So if this weekly 50 SMA has been holding so far since last week and last week when we saw our first retest 2 weeks ago, then there is a chance that we can see some sort of a pivot, a nice V-shaped, a very small V-shaped pivot back to the upside to, at the minimum, retest this 3-digit share price number, or the golden level and psychological level of $100, right? 100. And so Disney, with this weekly 50 SMA area of support, we can just simply buy at this weekly 50 SMA for the longer term, and it can be as easy as that. But if you guys are looking at this from a simple trade perspective, where you guys are just trying to hold this swing trade for about 3 months, or even turn it into a position trade for about 6 months, if you want to have it as a long-term position or mid-term position, you guys need to be focusing on the technical angle a little bit more. And so based on the weekly 50 SMA, we have also kind of come back into that previous supply area that sits around from, I would say, around 96 to around 98. And that's where we were able to see a nice, huge reaction to the upside as we blew off the supply cap that we saw around that 98 whole number level. And that is the reason why I gave you guys this long entry point over 98.20. However, if you guys want to be even more simple with this potential longer term, maybe even longer term investment position, or just a simple position trade for about 6 months, just look for an entry point once the price breaks over the previous high of the week, which was at 98.29, right? So maybe you guys can try to get an entry point around 98.55, which is over that 98.50 whole number level. All right, and so for Disney this week, if you do see a nice break over the previous high of the week at 98.29, then I would expect it to see at least a retest of this psychological whole number 100 triple digit number, right? And again, obviously the daily 10, daily 21 SMAs will be acting as huge areas of SMA resistance. And so at some point, if you do see a retest of 100, then we should be coinciding with this weekly 10 SMA as well as our first official retest. All right, that is it for this video. If you guys thought that this technical analysis video was very insightful and most importantly applicable, make sure you guys smash that like button down below. And if you guys are newcomers to this channel, make sure you guys hit that subscribe button, but most importantly, hit that notification bell icon as well, so that you guys know when I am live on Tuesdays and Thursdays and when I have uploaded a new video. Good luck, and I'll see you all tomorrow morning. Thank you so much for watching.